Hey guys, Whitney here. Welcome for our next installment of Passive Investing Made Simple. I'm going to give it just a moment for everybody to kind of file in here. While you guys are doing that, Happy New Year! Happy holidays! How are y'all's holidays, Chris and Eric?
Great.
They were good.
Very good.
My family and I laid low just with a bunch of stuff going on. So my grandfather came to visit us, which was nice. I'm actually based here in Charleston, which I'll get into, but pretty casual. So it was good.
Awesome. What about you, Eric?
Yeah, we were down in Florida, hanging out with some family. So I'm from Pennsylvania, so I'm used to the winter feel of Christmas and New Year's. So it was 80 degrees and sunny, so it was a whole different environment to be in, but it was nice.
I hear you there. We spent a month in Sedona. We've done that for a couple years now, just playing mountain biking, supposedly getting out of the snow away from Colorado. It didn't snow while we were gone, but my in-laws never would come down to meet us because she's from Chicagoland and she was like, I want snow. um, yeah, now we've got too much of it coming our way. Anyways, well, we got everybody here. Thank you so much for joining me today. I am so excited to have you guys here. If this is your first opportunity of joining the Passive Investing Made Simple Masterclass, this masterclass is to help you take all the knowledge that we disperse here and put it into action so you can confidently make your first or next investment. If this is your first webinar, you should be registered for future webinars, but if you are watching this on YouTube later and you want to see other additional webinars or attend the masterclass live, be sure to go to passiveinvestingwithwhitney.com and register there to get access to some free goodies as well as future masterclasses. But to kick off today's call, I wanted to bring in two very special guests from the passiveinvesting.com acquisitions team, Eric Fitzgerald and Christopher Neary. Thank you guys so much for joining me today.
Thanks for having us. We're
Yeah,
excited.
appreciate it.
Well, before we demystify the Tampa, Florida market, would you guys just take a moment to introduce yourself and your role here at passiveinvesting.com?
Sure. So my name is Eric Fitzgerald. I'm the director of acquisitions. So basically, me and my team, we source and identify, analyze properties for us to acquire. And that's a lot of kind of market traveling, broker networking, financial analysis. So all that stuff kind of grouped into one. And we've done a good job, I think, especially this past year with Chris coming on full time. And we have an analyst now and a couple new hires coming. So it's been an exciting year for us.
Excellent. Christopher, what about you? What's your role?
Yeah, I'm Chris Neary. I'm the acquisitions associate, so I work on the same team with Eric. And I was born and raised in New York, but now I've been residing in Charleston for 7 years now. So enjoying that warm weather during the holidays. And just like Eric said, we're sourcing deals, underwriting deals, performing market research, which is our topic today. So we'll definitely highlight that, of course. And yeah, that's my role within the company.
Awesome. Well, I know so many people have so many questions here today, and we've covered a little bit in other videos what investors can actually control when they invest passively. And that is their own personal investing goals, the operator they invest with, the market they invest in, and then also the specific deal they go into. Today, let's pick apart the market research. And I want to actually start with why, you guys share with us, why is market research so important?
Yeah.
And what do you guys actually look at? What metrics?
Yeah. So that's a good question, and obviously there's probably nothing more important than location and the business that we're in. And with our group, we're based in the Southeast, and we look at markets all the way from North Carolina down to Texas, over to Florida, and kind of all in between. So we have to know those areas very well, and we have to know when a deal comes in. Chris has the number, but I think we looked at around 500 deals last year alone. So that's a lot of high-level vetting based on location. And actually, I think that number might actually not include the deals that we automatically kick out. I think that's the deals that we actually underwrote.
Correct.
Actually, yeah. So getting down to that number includes, okay, this deal came in from, Tampa, for example. What deals have we looked at in Tampa before? And so we track that through our deal CRM. It's called Deal Path. So we're able, when a deal comes in, to see, okay, what properties have we looked at around it? What did our underwriting look like on that deal? Did we like the submarket before? What has changed, to now? So that's just kind of some of the things that we look at. I'll let Chris kind of speak about anything else that I missed there.
Yeah, so certainly, I think as a group or anyone looking to get into real estate, you need to have a high level criteria set. You can't really throw a dart on a map and just say, okay, I'm going to invest in this area. There's factors that play of picking where we want to invest our investors' money and where we want to purchase deals. So that's really the first thing is figuring out, setting a criteria for yourself or a group, and then that gets kind of deeper into, job growth, migration rate, things of that nature, and why do we want to go into that market. So a lot of demographic research is involved, as well as job research. So we can definitely get into that if you would like, but a lot of economic and demographic factors are a huge reason why we go into a market like Tampa.
Awesome. So, let's just maybe just highlight some of those demographic factors that you're looking at and the job specific factors, because I want the listeners to kind of get a sense of just the depth of work that you guys are doing to rule in a deal, and take it all the way through the underwriting process.
Yeah, absolutely.
Go ahead,
Eric. You want to go ahead?
Sorry, we haven't nailed down our turns here. I guess a couple of the economic factors, I guess, would be job growth. So obviously we look at that. We drill really far down into the median incomes of the area, and there's a couple of reasons why we do that. One being, we want to make sure that the people living in that area can actually afford that property's rents. So we looked at a deal actually this morning that the monthly rent was 42% of that area's median monthly income. So if we go buy that property and we say we're going to go raise rents, what actual clientele are we going to be putting into that property in that area? So that's something that we look at a lot. Absorption rates. So as far as demand goes, Tampa has been one of the top markets. And, people will get scared sometimes about supply. And there was a deal here in South End Charlotte where, South End of Charlotte is this booming area. There's a lot going on and people are scared about the supply. And then you have to also look at the absorption and the actual demand of what that submarket needs. And you can see that demand in a lot of cases in those markets actually outstrips even the highest of supply that you can see. So those are just a couple of things that we look at.
So go ahead and define absorption, because I think people understand supply and demand, right? That's a concept that we learn probably pretty on, economics 101, maybe in high school or in college. But what does absorption mean?
Yeah, so it's a number of units. So say there's an X number of units that are being built in a submarket. How many of those units are actually being rented and being absorbed of that supply?
Mm-hmm. Very important metric to look at. Well, I know you guys are chomping in the bit to get into Tampa. Let's pick apart Tampa, the demographics that you guys are looking at, the different job metrics that you're looking at, maybe even just from a global standpoint, taxes. I know there's so much that goes into it. So can you just guys kind of break apart, why Tampa?
Yeah, absolutely. I can start on that. Just to give you, I pulled a couple of data points together from different websites, including CoStar, Yardi, and RealPage, just one of those softwares that pull all these data points together. And the in-migration rate is number 4 in the country for Tampa. So that just is a metric of showing how many people are migrating into Tampa, whether that's Northerners, retirees, whoever it may be. And we've seen throughout the pandemic of how much movement there has been within this country. So that is definitely a factor. And a lot of Northerners are coming down with these higher salaries or higher expectations for rent growth or rent expectations. Therefore, there's a lot of opportunity to increase rents. And to give you another statistic here, the In 2022, the projection for 2022, there is a 14.3% rent growth just for Tampa itself. So that's a very, very large amount of percentage. So that's why we're really excited to break into Tampa and source some deals from there. Eric, do you want to touch upon some things as well?
Yeah, we don't underwrite for 14% rent growth, but
No.
that's certainly a nice cherry on top. Sometimes we feel like some of the deals that we lose, we think some of our competitors are doing that in order to pay some of the prices that they're paying, but that's probably another discussion. Another statistic that we have here, vacancy is projected to be at 3.2%. So again, we typically underwrite for 95 at the best case, but both of those metrics obviously are pointing in the right direction for exceeding our underwriting expectations and our assumptions. So that's certainly vacancy and rent growth, two awesome kind of stats to look at when you're looking at a market.
Quick question on the vacancy. Are you guys taking into account economic vacancy? I know we saw that with the pandemic. Vacancy means is somebody in the unit or not. The economic vacancy means are they actually paying?
Yeah,
Right.
yeah. So that's physical vacancy. With economic vacancy, with the space that we're in Class A, Class C got hit harder in the pandemic with kind of the lower income residents. Class A, across our entire portfolio, we did not have any major issues with collections. I wish I had this statistic of what our actual collections were, but we didn't experience any major difficulties from COVID. And the properties that we're looking at down in Tampa and markets like these, in the trailing financials, you actually won't find really any issues. Typically, like 0.5% of bad debt. It is something that we definitely look at and we underwrite for, typically more conservatively than what the property is currently achieving. But that's right. Economic vacancy is definitely a big thing to look at as well.
Awesome. So what else are you guys looking at?
Yeah, absolutely. I think a big portion or a necessary stat that we need to look at is how much are the home values within Tampa or the market that we're looking at. And just to give you another statistic, the single family home values are projected to rise 25% from October of 2021 to 2022. And that's just in Tampa. So the 25% increase in home value. A lot of people do not want to take on, yes, interest rates are lower, but a lot of people don't want to take on a higher mortgage and therefore will go over to renting and multifamily. So that's another huge statistical data point that we do track. And another, we call them KPI as well, is tracking how much, I have it somewhere here. It is how many number of households or home values are greater than 300,000. That depends on the market, of course, but we definitely have that statistic within our analysis as well. So that's another thing we can add as well.
Excellent. Now, I know, when I was, director of investor relations, I had to ask, answer a lot of questions, from passive investors or like, well, why Tampa? Like, we talk a little bit about the metrics and stuff like that, the housing metrics, but also, Florida has some built-in pro-business, aspects to it. Can you guys touch on that?
Yeah, we love Florida. So we've 2 acquisitions in Orlando. We're looking in Jacksonville, and we have one now under contract in Tampa and continuing to look. So their business environment is very friendly. Another big thing is they're landlord friendly. So as far as the eviction processes, they're actually a little bit more friendly than the Carolinas as far as what our power is as a landlord. So I mean, Florida is known as being a little bit more conservative in terms of those kinds of laws. So that's something that we look at, and a lot of the southeastern states that we look at are similar to that in those respects.
There's also no state income tax as well as Texas. So those are 2 states we highly value and we're definitely aware of that as well.
Awesome. Awesome. Now, Tampa's a very large metropolitan area. Are there specific submarkets that we're looking at in the Tampa area that kind of draw your eye?
Yeah, so we've looked at a couple deals and have been very interested in a couple of the submarkets. One of them obviously is Fort Myers. So that's where Las Palmas is. That's the deal that we currently have under contract. That specific submarket and that specific property, the median income of the residents there, I think, was around 180,000 or something like that. So when you have residents with those kinds of incomes and you look at where rents are at, I think we were at 18 or 1900 on average. So that resident coming in with $180,000 of annual income, that $1,800, $2,000 rent is like a drop in the bucket to them, and it's a very affordable kind of area. So Fort Myers we love for that reason. Sarasota has seen 30 to 40% growth on lease tradeouts in this past year. The Sarasota is another awesome market. St. Pete, which we know a broker that is based out of there. Brandon and Bradenton are two others that we've looked at deals in there.
Awesome. We had a question come in, and this goes back to the kind of the pro-business aspects. I mean, we said that Florida doesn't have a state income tax. What about the property taxes?
Chris,
Yeah, I can touch upon that. So it's definitely consistent throughout Florida with the property tax. So there's two aspects. There's an assessment value and a millage rate or a tax rate, and they're pretty consistent throughout the state of Florida. So that's not a huge driver for us in Tampa, so to say, but it's definitely not as severe as we've seen in other states. So it's obviously one of the largest, or the largest expense we have is property tax. So it's something that we definitely vet and call the counties and all that. But it's not definitely the worst or one of the better aspects of within Tampa.
Awesome. No, thank you guys for addressing that question. All right. So we've talked, about why market underwriting is so very important. We've talked about Tampa specifically. We dove into a couple of the different submarkets. Now let's kind of wrap up and put a little bow on this. How does the underwriting actually help an investor, the general partnership and the limited partnership, mitigate risk?
So the underwriting, as far as how we do the market analysis.
Mm-hmm.
Yeah, I mean, it's one of the most important things. So you can get a deal that on a spreadsheet says we can get a 20% IRR and a 10% cash on cash return. And then you actually get into operating that asset and, trying to actually achieve those returns. And you realize that either, the market is not conducive to your business plan, or, that market is actually negative, has negative population growth and you're not actually growing in that area. And it also impacts it when we go to sell. So typically in an area like Tampa, the end user for our property is going to be an institution that's looking to get into one of the major markets. So we like to target those, Tampa, Fort Myers, Orlando, Charlotte, Charleston type of markets where when we're ready to go full cycle and return capital to our investors, we have a laundry list of institutions that are trying to get into that market. Chris, did I miss anything there?
No, you definitely spoke upon that well. Yeah, I think you hit all the points I was thinking about.
Sorry.
Awesome. And I just want to kind of also draw here that you guys are diving into, heavy, large databases like CoStar and Yardi. And I've also fielded questions from investors before. They were like, hey, can we have access to those databases? Generally, they come with a heavy subscription model, but can you guys give the investors maybe a resource to where they can, kind of do some of their own digging on numbers?
Yeah, there's so if you search Yardi Multifamily Tampa report, Yardi puts out free reports, which are actually very helpful. And I don't know why they don't charge for them. I think it's kind of a way of getting people in the door for their service. But The reports are a good couple pages long and kind of breaks down supply and demand, trends, employment, demographics. So that's a great free resource if you're vetting a market on your own as a passive investor. All the major brokerages usually put out reports. So, Cushman and Wakefield, Tampa report 2021 or 2022. Typically, the major brokerages will put out reports, and those are usually pretty comprehensive in terms of, trading in that submarket. So where things are trading at, and kind of the trends that they see, working day in and day out in those submarkets.
Yeah, I can build upon that. I know Berkadia released one that I actually Google searched earlier on Tampa, so you can definitely check that out. I think it was a mid-2021 report, but it's definitely correlated to our discussion today. And you can do a simple Google search of Tampa multifamily data points, and you can find a ton of research and some other local news sources. Forbes, I know, wrote a report on Tampa. A lot of these news sources do write reports and basically just reference these co-stars, these Yardies, these Real Page. So you can find data within these articles.
Awesome. Well, thank you guys so much for joining me today. It's been such a pleasure. We are going to continue the market report series. So we're going to hear more from Eric and Chris over the next few months as far as like what markets we're currently invested in and that we're looking at to bring online. Be sure to join us for next week's session, Masterclass session. And if you're not already registered, go to passiveinvestingwithwhitney.com and fill out the little form there. I've got some free goodies for you. And you can also, you'll get an email with the registration link. Anyways, if you're ready to check out our deal flow as well, make sure to join passiveinvestingwithwhitney.com. Anyways, guys, thank you so much for joining me today, taking your time out and spending it with us.
Yeah, appreciate having us. Thank you.
Appreciate it.
Take care.
See you guys.
Yep.